This week is a huge week for cryptocurrency and Bitcoin alike. With two other important news events, CPI and FOMC, still on the horizon. We can expect a lot of turbulence within the markets and hopefully a directional move at the end of it. Let's go ahead and dive into the charts. Okay, what is going on, MegaWhale team? Welcome back to the channel. Thank you for tuning in on a Saturday. Saturday is quite a quiet day in the market. Usually we don't see a lot of movement. And of course, everyone's busy on the weekend. So if you are here, thanks for tuning in. It's great to see you on the weekend. We're going to be talking about PPI today. We'll talk about the result of the PPI, which is a producer price index, how it's going to impact the market, and what it could potentially tell us about the CPI and FOMC coming up later in this week. We're also going to do a technical analysis on Bitcoin today, focusing on the macro, and then we'll wrap up the video there. So before we get stuck into it, guys, hit the comment button, smash the like button, and subscribe to the channel if you are new. We do daily technical analysis videos on Bitcoin, focusing on the charts, the structure, and the data alone. Nothing more, no emotion, no opinion, pure data. And as well, second link in the pinned comment will get you access to our Telegram channel. We post all our news events in here, all the videos, all the updates, all the charts, everything you need to understand the market and get along with what's happening. If you're interested in our VIP channel, you can go ahead and access the VIP channel via the links in the free channel. You can see all of our results over here each month. You can see November over here, we had 17 trades, 4 losses, 80% win rate, etc., etc. Let's go ahead and dive into the video, and we'll start with the market data. So for the month, we are currently negative 0.22. Again, not a lot is happening this month. We're very much sideways, waiting for the big events. And the big events are CPI and FOMC. PPI was just a little teaser of what could come. We'll talk about that in a second. But we don't expect volatility to start moving upwards again until we get these two news events past and behind us. Moving on, volatility we can see has dropped from 2-ish to 1.77 again. The market is very, very low in volatility right now. We're starting to clear this jump in volatility we had during that 4, 5, 6, 7, 8, 9th, and 10th of November. We had a little jump in volatility there. We're starting to clear that out. So as we can see, as the 30-day period starts to smooth out that data, it becomes redundant, and we start deleting that on the chart. And then we can see a long period of plateauing in price data over here between that 4.04 and 4.13 level, which is basically no 30-day change in volatility. So naturally now, as we delete that jump in volatility, the volatility is going to start dropping, and we can expect this to come back down to that 1.4 level, potentially if we don't see any spikes in the next 24 hours. Moving on, liquidations are very, very low. We're only sitting at 19 million, and anything under 20 million is basically a crab market. Anything under 20 million basically means there's no volume, there's no trading, it's very quiet, and you can probably see that in the market today. It's going to be quite quiet, and that is what it's telling us. Moving on from there, guys, economic data, we actually just passed PPI. We do have the core inflation and inflation year on year coming on Tuesday, which is in fact 3 days from now. This is the 10th, 3 days from now if you're in America. And of course we have the FOMC decision, FOMC meeting, which is coming on the 14th, directly 1 day after the CPI. So these are the two big events. These are the events that are really going to shift and shake the market, and we'll quickly discuss these later on in today's video. But PPI came in at 0.3, and the consensus was 0.2. So it came in above consensus. What does that really mean though? So let's go ahead and talk about PPI a little bit, then we'll get into the analysis. So PPI, producer price index, essentially can be a leading indicator to what CPI can be. So here's a little diagram over here. We can see PPI, which is right over here, and we can see if PPI rises, we generally can expect a rise in CPI. As prices rise for producers, these prices generally get pushed down to consumers. And we don't always see the rise in CPI. Sometimes it's drawn out, sometimes it's delayed, sometimes it doesn't even happen depending on materials rise in price. But often we can generally use PPI as a leading indicator to expect CPI to come in slightly higher than what is consensus or what is expected. So CPI right now is expected to be 0.5. So it's telling us, well, PPI came in higher, maybe the odds or the probability that we come in slightly higher on CPI is now possible. And that is a warning sign, because as we know, CPI is a leading indicator on what interest rates are going to do, okay? If CPI continues to fall down month in month, okay, month after month, it continues to fall down, It tells us that interest rates are doing their job. They're at an effective rate to do their job, which is to bring down inflation. But if CPI starts rising again, it tells us that interest rates aren't being moved enough to actually counteract the inflationary pressures, and therefore interest rates will need to actually rise more. So if PPI tells us anything, it tells us to be a little bit more cautious moving into CPI, because we can expect a greater probability that there is going to be a negative result for CPI. If there's a negative result for CPI, there's going to be a negative result for interest rates, and the market's going to react negatively round in round. Moving on from there, guys, let's talk about the DXY and really get stuck into what's happening with the price action on Bitcoin after. So, DXY, how's it looking? On the daily chart, it looks like we have lost this 106 level. We lost this 106 level quite some time ago. On the hourly chart, we are finding temporary support down at this 104.5 level. You can see by this gray box, we developed a descending channel, falling wedge pattern. We have actually broken to the upside of that. Doesn't look like we have a lot of sustain above here. We would like to see a move back into this range, okay? This is the key level we do need to get it back above. If we are able to get back above this resistance level, we can see a push higher for the DXY to retest 106, and again break over 107 will result in a push up to 109. By that time, the markets will have fallen quite a decent amount. So if you're looking for a bearish scenario for the traditional markets and cryptocurrency, you're hoping that DXY should rise. As the DXY rises, money flows out of assets and into the dollar gains strength, and it's reflected by this chart. So we do expect that as this level of support holds, we can expect the DXY to potentially move upwards, but we are stuck between a major support and a major resistance here, which is a sideways chop. Again, indecision. Indecision is a key word. We're seeing a lot of indecision around the technicals, around the financial markets, around cryptocurrency. They're all holding out for these economic drivers that are coming out, this data that's coming out for these economic drivers in the next few days. Very important stuff. Looking at the Dow Jones. So again, not much is happening here. We've actually rejected from this dashed line, which is a very important line, a very important resistance level. You can see we pushed above, we faked out, we created this bearish divergence, we have rejected, we've pushed back down. What we're looking for over here is two things. Currently, we have to understand, we are currently between a major support zone, which is a circle zone over here, and a major resistance zone, which is a circle zone over here. Losing the support zone will result in a continuation back towards this trend line. Okay, very bearish. Pushing upwards and breaking through 35,000 will result in a continuation upwards, very bullish. Until then, we are kind of between these levels and we're kind of pushing sideways. Again, indecision, chop, consolidation, not much happening over here, waiting to make that directional move. Losing that low over here will result in that push to the downside. Again, the economic news is going to be the drivers of these price action. Moving on to the S&P 500, we're seeing a very negative thing over here, which is a push upwards after a breakout of this this rising channel and rejection from the rising channel. Pretty much the same thing, guys. Losing this low support level, losing this low, is going to confirm that continuation towards the downside. We'll be looking for targets around, we're looking at 3,800. We're looking at potentially lower if it does head down. So all in all, guys, we did confirm that rejection from the bear market resistance on the S&P 500. So the traditional markets are looking weaker here, creating a lower high after this rejection, confirming the move towards the downside. This move towards the downside will be confirmed once 3,924 is lost, and we should continue towards the downside. Again, S&P 500 and Bitcoin are correlated to a degree of 0.7. They're tied to that correlation via the dollar. So again, if the dollar rises, both of these markets can be expected to go down by different amounts, but will generally go in the same direction. So as we see the S&P 500 reject and go down, we do see Bitcoin similarly doing the same thing. Looking at bond yields, we have the one day 10-year government bonds over here, looking like we have some degree of a expanding wedge or a descending channel formation, and potentially a reversal pattern. Again, we will need to clear these smaller time frame moving averages for anything major to pop up. If we go to a 2-day chart, let's see where these moving averages are. On the 2-day chart, it looks like we have actually dropped below this, just as we did prior in August 2022. This could potentially be a bouncing point for the 10-year government bonds before you see a continuation back upwards. Again, bearish to the markets. On the daily chart, we are seeing a very similar thing happen over here on the 2 years, again printing some degree of a reversal pattern over here on the 2 years, indicating that if the 2 years go upwards, we can expect the DXY to continue upwards and the markets fall. All in all, guys, with the economic news coming out, with the data and the drivers in the position they are, it is not looking amazing. It's not looking amazing right now. We're in a spot that gives us potential to look great. Like I said yesterday, Bitcoin is very close to a downtrending resistance. The stock market is very close to breaking out the bear market, okay? We're in a spot that gives us massive potential to break out of these major macro downtrending trends, but we're not quite there yet. We're not quite there yet, and as we get closer and closer to our resistance, when we invert and go to the flip side, which are the bearish indicators, which are the things that are going to propel the prices down, they start to look more bullish. So it is a tricky position here, and a lot is resting on these economic drivers, particularly the CPI and FOMC. But let's go ahead and jump into Bitcoin. And as we can see on Bitcoin over here, we have been printing some pretty awful candles. And we have these lower lows or higher lows on the RSI here. We have higher highs over here, but we have lower highs. So it is signifying a lot of weakness in the trend. We are starting to lose momentum. We're starting to lose strength. We had our third retest of the uptrending support line. Again, we have 1, 2, 3, 4, 5. So we have a confirmed rising channel pattern over here, meaning that the next attempt on this trend line towards the downside will probably not hold. In terms of probabilities, it's got a very low probability of holding. Meaning that if we do retest this trend line again, we can actually expect a continuation to the downside, and the confirmation will be a loss of this low here, targets of 16,500 as per the VRPV. If we go ahead and bring that one up real quickly, as well as targets of these lower support ranges. So you can see in the VRPV here, we have a very large volume chunk over here represented by the POC, the point of control level. Again, a lot of support around this level. That will be a target, and then these lower levels will be targets. So again, rising channel, bearish structure, breaking that structure towards the downside results in the uptrend breaking, results in a trend towards the downside developing. That trend towards the downside, if developed, will be developing due to the fact that the economic drivers came out negative. That will shift the macro environment, shift the market environment, push the stock market down, add a lot of negative selling pressure to the financial markets and cryptocurrency, and will most likely bring in enough volume and volatility to drive the price through these support levels quite aggressively. So if the move towards the downside does occur, we have to not fade it. Be aware of it and be prepared for it, okay? To the upside, guys, same thing we've been saying for the last few weeks over here. We are in this very long consolidation phase. This consolidation phase is now going on about 10 days, I think. This consolidation phase starting around the 1st of December. You can see this consolidation over here. Let's go to a small time frame. For us to really get a move on this consolidation, we need to break out of this horizontal range. We really got to break out of this range over here. And as you can see, this upper high over here corresponding to the upper high over here in November is the point we need to break. So we do need to push above into this lower volume range. You can see almost immediately the VRP basically dissipates above here. We do need to break upwards through about 17,450 level to make any sort of push higher. And the push higher will take us up to around 18,100 if that occurs. And of course, that is a story for another day, but the 18,100 is a major rejection point on this chart, represented by the June to November low. Again, a massive rejection point. Even if we retest that level, we can still possibly get rejected. Let's go ahead and take a look at the macro really quickly. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund. In case the exchange gets hacked, you can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video. And then we'll do a macro analysis. So the macro is looking decent on Bitcoin, just as it was looking decent on the stock market. We are at major downward resistance. This is our bear market. This is our bear market resistance. This downtrend is actually representing the price action and the price structure, which encompasses the downtrend or a macro downtrend or the bear market, whatever you want to call it. Meaning, if we break above this downtrend, we are technically breaking out of the bear market. We have retested that bear market resistance yesterday once more on that pump to 17,300 on the PPI release. Very interesting rejection here. It will be very interesting to see what the daily candle does. We are currently green. Again, losing this uptrending line will confirm the rejection here and confirm that continuation back toward the downside. If we do lose that 15,500 support, we can expect a target of 13,900 to 12,000. It's very unlikely we go under 12,000. As you can see, we have massive increases in volume down in this range, represented by this immediate wall. Okay, we have an immediate jump in volume past 12,000, indicating huge support is sitting at 12,000. It would be very unlikely for the price to fall through. We would have to see something very catastrophic occur in the traditional markets with the economic drivers or cryptocurrency as a whole to see that kind of move. Moving towards the upside, guys, like I said, if we break out of our 17,400 level, we will be breaking out of the short-term trigger level. Let's bring it up. Let's bring it up again. The short-term trigger level to push us to 18,200, as well as the bear market downward trending resistance. This pushes us into this range. Very bullish stuff. Great thing to see. For us to see any sort of uptrend develop from there, we need to see two things. We need to see a break of our shorter time frame structure, which occurs from this falling wedge pattern, okay? More importantly, we need a break over the POC. The point of control, $19,000, is the key trigger, the trigger point that confirms the break of the bear market is validated, okay? The breakout of the bear market downward trend resistance is a breakout. The validation of the breakout is a POC and the downtrending resistance that corresponds together, okay? Breaking through this level allows us to push upwards, potentially push up into these higher levels. Very interesting. We're getting very close to it. We're very close to attempt these breakouts. So like I said, the market's in a very delicate spot here. And as we approach these delicate positions, these news events become even more significant and even more potentially damaging or facilitating towards whatever bias you have in the market. So guys, pay attention to the news. Keep your eyes open, okay? Keep your eyes on the dates and the times and be aware of the impacts these have. Like we said before, PPI came out worse. That tells us there's a greater probability now that CPI could potentially come out above consensus. Consensus for the CPI, 6.1, okay, for core, 7.3 over here for year on year. As you can see, the forecast is already higher. So the forecast is now higher than consensus. And again, if that comes out higher than forecast, higher than consensus, we see the markets drop massive, big time, okay? The reason why we'll see a big drop is because CPI is a leading indicator on FOMC. And as we know already, the market's moved on perceived systematic risk, meaning that the market is aware that if CPI comes out bad, the probability that FOMC comes out terrible is much higher, and the market will move in anticipation of bearish news on FOMC, irregardless of the fact that it has not even come out yet. So be very much aware, be patient, pay attention. This is not the time to be FOMOing in. This is not the time to be taking big risks. This is not the time to trade too much. This is the time to patient, wait and sit in your hands, be aware, be ready, and act when required. Guess what, guys? Even if the prices rise, even if we go up, even if we push higher, we got so much room to make up. We got so much ground to clear before we are actually entering what you would call the optimal entry point for Bitcoin. The optimal entry point for Bitcoin is not the cheapest price. I've said it before. It is the best price you can get with the lowest risk possible. And guess what, guys? That is not here, because we still have a potential to drop 25-30%. 25-30%, okay? The confirmation of the entry point is 11% away, meaning that you're risking a 0.1 to 1 risk return, okay, on purchasing now. Not favorable, not good, bad trade. Okay, I'll see you guys in the next video. Take it easy.